All right, Tasha, let's talk about this very, very bullish call. $2,000 a share by 2027. You're raising your price target when a number of analysts on the street slashed their price targets because they were worried about margin pressure. What are they missing?
Earlier this week, Ark Invest Tasha Keeney gave a jaw-dropping interview, explaining why they've increased their Tesla 5-year price target to $20,000. Watch this 90-second clip, and let's discuss whether we think the increase is justified or not.
About margin pressure, what are they missing?
Well, I think the concerns over margin pressure are very short-term oriented. We've heard Tesla say this, but we've actually modeled the opportunity in robotaxis and autonomy. And if you look at the future of, Tesla vehicles that are capable, becoming robotaxi enabled, earning a recurring revenue stream at what we think will be software as a service like margins. This is an amazing potential for Tesla. It'll definitely be, the highest return on investment per battery produced, as we've analyzed in our new report up on our website. So I think that, again, this will totally change Tesla's margin structure in the future. They mentioned on the earnings call that they're prioritizing getting cars out on the road. I think that's a smart decision as opposed to, keeping margins high and prices high in the short term. They just want to get as many cars out on the road as possible. Those cars feed Tesla's data engine, and that's what turns each of them into a fully autonomous car in the future.
Yeah, Elon said on the earnings call he thinks they could achieve fully autonomous this year. Is that your expectation?
So we have a Monte Carlo model with a range of assumptions. The midpoint of our expectation is in 2024. So it'd be later than Elon says. In our most bullish case, I think they could launch fourth quarter this year. But again, the real thing to look at here is, whether or not it's fourth quarter, whether or not it's next year or the year after that, this is an amazing opportunity. We think the market for robotaxis globally could be worth, $9 to $10 trillion in the next decade. So it's clear why Tesla is pursuing this opportunity. And again, with their data advantage and their verticalization, they really could be a leader here.
Tesla shares fell nearly 10% a day after the company reported a more than 20% drop in net income and EPS compared to the year-ago quarter. However, in the midst of great uncertainty, with more analysts cutting down on their price targets for Tesla, Tesla bull Cathie Wood and her firm Ark Invest have chosen to see this as an opportunity for investors to buy. Following Tesla's recent Q1 earnings call, several investors lowered their price targets and estimates for Tesla. But Cathie Wood may be seeing all these in a whole different perspective. What has she said? You're just about to find out. Hey guys, welcome back to Tesla Tomorrow. Wood's firm, Ark Invest, recently bought Tesla's dip, boldly forecasting the electric vehicle company will surge to a more than $6 trillion valuation over the next 4 years on the same day its stock tanked 10%. Wood's firm disclosed it bought 219,810 shares of Tesla in its flagship Ark Innovation ETF, and another 36,213 shares of Tesla in its next-generation Internet ETF. That's roughly $41.7 million buy up, using Tesla's $163 closing price at the time when the stock slid 9.8% and the company lost $51 billion in market value. Ark Invest also set a new price target for the automaker's stock, stating that if all goes well, Tesla's stock price could reach $2,000 by 2027. How will this happen? Let's find out. But before we get on with it, if you like this type of content, hit that like button, subscribe, and don't forget to turn on notifications to keep up to date on everything going on with Tesla. Longtime Tesla bull Cathie Wood and her firm Ark Invest have recently released their projections for Tesla's future stock performance, offering up quite the rosy picture. Ark set a $2,000 base case scenario for Tesla's share price in 2027, an 11-fold increase, setting its bearish forecast at a $1,400 share price and bullish at $2,500. At $2,000 per share, Tesla would have a market capitalization of $6.3 trillion, roughly the market cap of the world's three most valuable companies, Apple, Microsoft, and Saudi Aramco, all combined. Before now, Wood had predicted that the stock price could go as high as $4,600 by 2026. This was after she had predicted a $3,000 stock price by 2025. Cathie Wood is a big fan of the stock market, and her flagship ETS has made many investors millions in the past, as she is constantly on the lookout for the next big thing on the board. Wood has high hopes for Tesla. The Ark Invest CEO bought Tesla shares on the day of its biggest plunge since September 2020, and this reaffirmed her conviction in the EV maker. Wood claims that Tesla will be the biggest winner of the AI revolution and autonomous driving. Wood did not just give these predictions for Tesla stock without reason. Driving Ark's lofty expectations for Tesla were its forecasts for the company's robotaxi, or driverless ride-hailing, segment, projecting $200 billion in 2027 revenue from the unit in a bearish case scenario, and $613 billion in a bullish case. Tesla is working on a self-driving robotaxi, which Ark predicts will become the most valuable piece of the entire business. These vehicles would not require any human intervention, and could be the key to unlocking value from brand new industries like autonomous ride-hailing, which Ark thinks could be a $14 trillion opportunity by 2027. The firm had recently shared the results of a series of simulations, predicting when Tesla's robotaxi might become commercialized, and 2024 appears to be the most likely date. This is in line with the company's prior guidance. Ark estimates that by 2027, Tesla will be generating $1.02 trillion in total annual revenue, 25% of which is going to come from the robotaxi segment. It also further predicts that since the robotaxi business could be an incredible source of growth, it will make up 58% of Tesla's $6.1 trillion in enterprise value at that time. Ark Invest has grown increasingly confident that Tesla will launch a robotaxi service soon. Its updated Monte Carlo model includes a range of launch dates, with late 2024 as the weighted average in all cases. The interesting thing is that Ark is focused on the longer term, which supports the claim of many Tesla bulls that Tesla will be big in the near future. Tesla is more diversified than any other pure-play car maker, and if it unlocks as much value as Ark Invest predicts over the next few years in autonomous vehicles, its stock could soar to the price target set by the firm, $2,000. Ark's research update presents a new open-source Tesla model, which incorporates distributions for 41 independent inputs to simulate a range of potential outcomes for the company. Tesla's prospective robotaxi business is a key driver, contributing 67% of expected enterprise value and 64% of expected EBITDA in 2027. According to the investment firm, across its simulation set, EVs accounted for 47% of revenues in 2027, a substantially lower margins than the robotaxi revenue. Interestingly, robotaxis aren't the only thing that Cathie Wood is excited about. According to Wood, buying Tesla stock is one of the best ways investors can capitalize on the rise of ChatGPT and broader AI tech. The Tesla bull recently disclosed that the electric car maker's status as the top holding in 3 of her funds reflects its share price's potential to surge 8 times due to its prospective status as an AI stock. Wood claims that Tesla is one of the most profound AI companies out there, adding that Tesla is not an auto company but rather a technology company. In a recent flurry of AI progress, from large language models like ChatGPT to image-driven diffusion models like Midjourney, this should accelerate innovation in the autonomous driving industry. Tesla, for instance, already uses transformers popularized by large language models for lane and intersection prediction. According to Ark Invest, Tesla's vertical integration strategy and Dojo training supercomputer are key competitive advantages. Tesla currently runs at 100% capacity, suggesting that Tesla's plan to expand Dojo by 2 orders of magnitude next year will help the company shorten the time between model updates. The firm added that recent videos of its latest FSD software update, including one of a driver who nearly completes a full ride-hail ride without having to touch the wheel, suggests that Tesla is close to launching in some locations. Wood said that she expects the rise of AI to disrupt traditional technology players like Google parent Alphabet, which is currently developing a homegrown ChatGPT alternative called Bard. She further stated that the world is changing quickly with AI, and all the news around ChatGPT that has captured the public imagination and that of businesses is happening very quickly, adding that her firm's portfolios are very focused on the future. While Cathie Wood thinks that many companies will be disrupted by AI, the Ark Invest CEO feels that Tesla is well positioned to take advantage of the rise of AI because it's looking to dominate the self-driving taxi market, which Wood has predicted will be one of the major transportation themes of the next decade. Wood and her firm believe that Tesla's data library should help prove statistically the safety of its vehicles, giving it a significant advantage over peers in the regulatory approval process. The recent report claimed that Tesla's customer-owned fleet drives more than 120 million miles per day and over 1 million miles per day in FSD. Although, in contrast, Cruise and Waymo have reached just 1 million miles each driven on public roads in their multi-year lifetimes with no one behind the wheel. According to Ark Invest, accident statistics suggest that Tesla has already achieved performance superior to human drivers. The firm's research disclosed that adjusting for its use on surface streets only, Tesla's FSD is 5 times safer than that of manually driven Teslas. Cathie Wood's company Ark Invest has been rather keen on Tesla's growth for a long time. And judging by what Cathie Wood has said, it's more than likely that Tesla is actually the reason behind all of this innovation. In a recent letter from the stock expert, she cited that she had found Ark Invest for 2 reasons: to focus exclusively on disruptive innovation and to create a transparent research ecosystem designed to surface and share information on the convergences between and among the 5 major innovation platforms evolving today, most of which Tesla is actively representing. Wood's bet on Tesla, and it's heavily based on the company's future potential with its robotaxi. The Tesla bull believes that autonomous taxi platforms are going to be the biggest opportunity around AI in the next 5 to 10 years. But what do you think? Let us know down below, and let us know what your valuation of Tesla is. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.